Welcome to Bits of Wisdom, offering insights on money, Bitcoin, and the world of exponential change. Hello, and welcome back to Bits of Wisdom. This is episode 6 of our series on money, our monetary system, and Bitcoin. I'm Paul Rogers, and thanks for joining me. In this episode, we're going to talk about the Federal Reserve System and how they come to the rescue in crises. Specifically, we'll talk about the financial crises of 2008 and 9, the current crisis in the pandemic, and how they get this printing press and what that really means. We'll talk about money supply and inflation, and ultimately it leads back to the question of, is our money actually serving the purposes of money and storing value? So let's talk about the Federal Reserve. As I mentioned earlier when talking about banks, the Federal Reserve serves a clearinghouse of transactions, and without getting into the nitty-gritty, the Fed is the bank's bank. But when it comes to Uncle Sam, well, the Fed is Daddy Warbucks. So we all know that the U.S. government hasn't had a balanced budget in decades. In fact, in 2021, the budget deficit was $2.77 trillion. Now, that's better than the 3.13 in 2020. But all told, the U.S. national debt is over $29 trillion. There's a website, usdebtclock.org, which just spins those numbers constantly. It's pretty scary. So how can the U.S. spend more money than it makes, i.e. takes in from taxes? Well, like any indebted household, it gets a loan. The U.S. does that by selling bonds, in essence IOUs, to investors, to other nations, and to the buyer of last resort. Thou who will never not buy a treasury bond, the Federal Reserve Bank. So where does the Fed get the money to loan to the U.S. government? Well, that's easy. It makes it. You see, the Fed has a printing press and can just print or make money. Of course, it doesn't really print the money, it just makes entries on ledgers, and voila, the government or banks have more money to spend, and the Fed gets more IOUs. I'm not making this up. Let's watch the current chairman of the Federal Reserve Bank, Jay Powell, make this very clear.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we, as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government-guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
So let's talk about the Fed riding to the rescue, because when there's a financial crisis, who are you going to call? No, not Ghostbusters, the Fed. It started a long time ago, decades ago, with smaller crises that I won't get into in details. Long-term capital management, Continental Illinois Bank, a very large bank that failed, the stock market tech bubble burst of the early 2000s, but it really got going in the financial crisis of 08 and 09. Now, the Fed also comes in whenever there is a business cycle that moves from expansion or growth to recession or contraction. When the economy starts to slow, the Fed takes various actions to decrease interest rates to make it easier to borrow money, which is supposed to help spur on the economy. So when you hear the Fed raised or lowered rates, that's what it's referring to. The Fed's trying to manage the economy to not go too slow or too fast. Now, the Fed's job by law is to do two things: maintain price stability, how much is that Coke now? And full employment. Let's dig in a little bit more to price stability. Remember, Coke was a nickel for 70 years, and now it's $1 or more. So in the last 60 years, as opposed to the first 70, it's gone up in cost over 20 times. Now, decades of research and academic papers and analysis have suggested that the Fed can, and more significantly should, try to manipulate our monetary supply, all right, to help control the economy. It's a theory put into practice that the Fed and the government can and should be primary actors rather than actual buyers and sellers in the marketplace in the function of the economy. Now, I got to admit that I thought all these Fed and monetary policy bashers were reactionary dinosaurs who had no place in a modern economy. And that's pretty much what everyone who is trained in the system in modern economics, who is getting rich in the system, says or thinks. It's one of those things that when you're so familiar with and so indoctrinated in the system, it's hard to see it for what it is and even harder to see its faults. But the fault lines for the tectonic shifts have become clear in the last two crises. And so that's where I'll turn our attention to in the next episode, the financial or debt crisis of 08 and 09 and the current global pandemic. So again, I'm Paul Rogers with Bits of Wisdom. Thanks for joining me.